Welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because Bitcoin is back in the middle of our fair value region. And the reason why it's called fair value is because if we expect Bitcoin to return to its 200-week moving average during bear markets, the closer we are to that 200-week moving average, the less downside mean reversion risk we have. Now, what's crazy is we actually had this exact same conversation on April 9th of this year, which was the last time Bitcoin was right in the center of our fair value region. And so many investors were extremely fearful and panic selling, expecting that they could buy back at much lower prices. And this time is definitely slightly different with us losing the 50-week moving average, which is something we haven't done yet this cycle on a weekly closing basis. So I will be watching Sunday's close very closely because losing the 50-week moving average has been a clear sign the cycle is over. But what I believe is important to remember is because we didn't get that massive mania phase and blow off top, we should also expect a more shallow bear market because we're already so close to the 200-week moving average. Whereas in the previous cycle, we were so much more extended from it and had so much more room for downside. And at the very least, if it is in fact over, you'd expect a pretty sizable mean reversion bounce back to the 50-week moving average before rolling over and looking for a bottom, similar to what we saw in the previous cycle before actually breaking down. Sentiment definitely seems to be agreeing with the high likelihood of a bounce, as well as sentiment has now hit the lowest level we've seen since February. And we have the crypto fear and greed index back in extreme fear for the first time since April. And I have a personal rule for myself to never sell an asset I believe in long-term during extreme fear, the same way I have a rule for myself to never FOMO into a market, no matter how bullish things look, during extreme greed, because it's very rare for extremes to be accurate. We see even more confluence with Bitcoin's daily chart death crosses and how the past three have all marked local bottoms. Again, those did hold the 50-week moving average as support. This time we are trading below the 50-week moving average. But again, at the very least, even if we are heading lower from here, we'd expect that mean reversion bounce before getting rejected and rolling over. And we can see even more confluence from the Bitcoin spot ETFs, losing $866 million in a single day, which is the second worst day on record. And every single time we've seen these huge outflows, they have been near local bottoms, the same way huge inflows have been near local tops, because these ETF inflows tend to be very correlated with investor sentiment. And of course, we're never going to hide from the bearish arguments on this channel. As we know, a lot of people are very concerned about the Bitcoin 4-year cycles and how this bull market has been the exact same length from bottom to top as the previous two. This is something I'm watching closely, but I can't bet my entire investment thesis on this pattern alone. This sell-off is likely driven by the profit taking we've been seeing from long-term holders who are hedging against the fact that maybe we are seeing the Bitcoin 4-year cycle repeat. And even though this profit taking is much smaller than December of 2024 and March of 2024, because we're not seeing as much demand from institutions and treasuries like Microstrategy being able to absorb that long-term holder profit taking, we're seeing price drift lower until it finds a new equilibrium. But I think this chart paints a very interesting picture. This is the Bitcoin cumulative long-term holder realized profit. As you can see in black here, long-term holders have locked in a lot of gains this cycle. But if you take a look at the orange line, which is the long-term holder realized cap, you can see that in 2017, we saw huge profit taking all the way into the cycle top. In the most recent cycle, we saw big profit taking in the 2019 rally, then accumulation, then big profit taking again. But this cycle has been way more slow and steady, where we see profit taking on rallies, accumulation during dips, profit taking on rallies, accumulation during dips. We're seeing some small profit taking once again, but I do expect these long-term holders to slow down with their selling now that Bitcoin is 25% off its all-time high. So where does that leave us? Well, I'm definitely going to update this chart if the weekly candle ends up closing like this. We have to remain open to the possibility that things could be over and we could be heading lower for a while if we do see Bitcoin's structure break here. But this asset loves to throw investors for a loop, so it wouldn't surprise me if we came down, had a big bounce alongside a bullish narrative that made everybody pile back in just to roll over once again on maybe recession fears and the Fed taking way too long to go back to QE, and then maybe find a major macro bottom there in the high 60,000s low 70,000s, which when you think about it really isn't that far from our current price. What really negatively impacts investors is not the downward price action of bear markets, it's the constant flip-flopping in sentiment where investors tend to panic sell at local bottoms during extreme fear and then FOMO back in on bear market rallies and bounces because of narratives or catalysts or sentiment flipping back to neutral or even greedy. So how will I be positioning for this and what changes will I be making to my portfolio? Well, I do only make changes to my portfolio on Mondays once I get to see Sunday's weekly close. And based on what I'm seeing here with extreme greed on the fear and greed index and a looming Bitcoin daily death cross, I'm very tempted to buy the dip just a little bit here on Monday with expectations of a bounce, but I will of course write about that in Monday's free weekly report. And as always, if you'd like to learn more about my portfolio automation system or mental models I use to navigate this market or common mistakes I see so many investors making, you can check out the Crypto Enjoyers program and community in the video description. Microstrategy also finally seems to be approaching an area where it could have a major bounce here coming off of this previous consolidation range between about 180 and 120. At the very least, you'd expect a bear market rally before heading lower if Microstrategy is indeed going to keep heading lower here. That aligns with our expectation of Bitcoin bouncing soon here as well. And with Microstrategy's MNAV getting closer and closer to 1 here, its downside risk against Bitcoin is getting quite small and it should trade more like a Bitcoin ETF over the next few months. As for our trading ranges, that close below 109K we talked about in the most recent video was definitely a major warning sign. Now we're seeing continuation to the downside. I'll be very interested to see how price reacts at our previous range low. That's really our last chance to put in a major bottom and bounce, and we're going to find out whether we can reclaim and carry on or if we're going to get rejected and roll over from there. But we're going to have to see what the bulls have planned and see if they can step in and create a recovery here now that the bears have started taking control. As for seasonality, November continues to look pretty rough. Again, I still think there's a chance that we could reverse things and at the very least see a pretty sizable bounce. But as of right now, it's no surprise why investors are so fearful because things do look quite bleak. But I do still expect a mean reversion bounce at the very least. And then from that point, we can see if we might have a local bottom on our hands and higher prices, or if we're just going to roll over from there. So we'll see what happens. As of right now, Bitcoin is breaking through major support levels. We really want to see it bottom here sometime soon and put in a recovery, or we're going to have to start talking about lower prices, but we'll wait and see what the weekly close ends up looking like. As for macro, the US government shutdown finally ended this week and the crypto bills are back on track, but it will take some time for liquidity to flow back into the system. The global liquidity index is showing some signs of life here, but we don't have a clear trend quite yet. I know a lot of people are throwing in the towel on this indicator because it is no longer working perfectly, but I still believe global liquidity is the main driver of a fixed supply speculative currency debasement hedge like Bitcoin. But that doesn't mean that other factors can take over in the short term, like long-term holder selling or a lot of capital chasing AI trades instead. Right now, investors are concerned that the Fed might not be cutting interest rates in December with the probability falling below 50%. This is what it looked like in Wednesday's video with the expectation sitting at a 65% chance of a rate cut. But if we take a look at what it's saying today, markets are now pricing in a pause in December instead of a rate cut. And markets and investors are not liking that outlook. This is continuing to strengthen the dollar a little bit in the short term. Again, I believe the dollar can rally higher in the short term before rolling over and putting in a local top because I believe there's just no way the Fed can keep rates above 3% for the next 2 years like the market is currently pricing in. We know that quantitative tightening is going to be ending in 2 weeks and it's only a matter of time before the Fed has to start QE, but there will be some volatility in the meantime. So I believe this global liquidity index macro breakout will continue even if there's some pullbacks and chop along the way. Gold seems to be consolidating here as part of its macro uptrend, giving its 20-week moving average a chance to catch up like it did earlier this year and late last year and early 2024 as well. This is just a trend and pattern that gold has been repeating over and over again because currency debasement isn't going away anytime soon. And although Bitcoin is significantly more volatile, it's been having this rally mean reversion pattern over and over again as well this cycle. Now, I know losing the 50-week moving average is very concerning, and we do want to see a recovery very soon. But in terms of our longer term thesis and use case for Bitcoin, I just have a hard time being long-term bearish on this asset. Up to this point in the cycle, Bitcoin would consolidate whenever gold would rally and vice versa. But as of right now, Bitcoin is going down even though gold is chopping sideways. The S&P 500 is chopping around near the all-time high as many investors are very nervous the AI bubble may be popping, but we don't see that in the chart quite yet. And as long as the S&P 500 continues grinding higher, that increases the likelihood that Bitcoin at the very least sees a bounce into a lower high, if not a recovery and continuation, as long as traditional markets stay intact. We're finally going to receive a lot more clarity this week with new economic data releases that we didn't get during the US government shutdown. So I'll be keeping a very close eye on US GDP, the labor market with things like the unemployment rate, initial jobless claims, and continuing jobless claims, and of course, inflation with PCE and core PCE. So I expect a ton of volatility and chop this week as the market digests all of these volatile economic data points that we haven't received an update on in quite a while now. As for Ethereum, still sitting at support here, again, similar to Bitcoin, very close to its 200-week moving average. So I'm nowhere near as nervous as I was in December of 2021 when I sold all of my altcoin exposure because Bitcoin broke its 50-week moving average. We know Ethereum long-term holders have been taking profit here alongside Bitcoin long-term holders. You can see a very similar spike here recently. Ethereum is also seeing outflows on its ETF similar to Bitcoin, which is also not surprising because Bitcoin is dragging Ethereum down. But what's quite interesting is Ethereum Bitcoin actually continues to be quite resilient, and Ethereum is selling off slower than Bitcoin is. Again, I was very comfortable selling my Ethereum in December of 2021 when Bitcoin broke its 50-week moving average because Ethereum Bitcoin was very close to its all-time highs. But when we look at where Ethereum Bitcoin is here, the downside is significantly lower than what we were facing in December of 2021. So I don't expect altcoins like Ethereum to underperform Bitcoin by as much to the downside. And speaking of altcoins, the altcoin season index is at a 45. Some of them are showing some signs of life, but until we see a clear price discovery breakout for the Russell 2000 and Ethereum, I don't expect alt season to happen. Those have been the two requirements for alt seasons in the past. And as of right now, we just don't have that backdrop. So it's no surprise that Solana continues to be dragged down by Ethereum and Bitcoin, but I'm a lot less nervous this cycle because we're only 25% away from the 200-week moving average, whereas in December of 2021, we were like 90% away from the 200-week moving average, which wasn't even on the chart yet because Solana wasn't even on most exchanges for that long. I'm really impressed with these Solana spot ETF inflows that are happening while Bitcoin and Ethereum are seeing spot ETF outflows and sentiment is in extreme fear. We also have Solana Bitcoin approaching a macro support level where at the very least I would expect a major bounce and we will then reassess from there. And I know this has been a very difficult few weeks for many. It's never nice to see assets going down, especially when Bitcoin and Ethereum have been relatively flat for a year now when comparing to the prices back in November of 2024 after the election. But this is the time where every investor has to ask themselves if they believe in this asset class in the long term and they're going to have a long-term plan in place, or if they're just going to sell, run for the hills, and come back next time times look better. Each approach can work, but some are easier to execute than others. And as always, the federal government continues to run huge deficits. That trend continues to worsen year after year. Exponential debt growth results in exponential money supply growth as the currency gets debased and the debt gets monetized, which is a bullish tailwind for our risk assets that we price in the devaluing fiat currency like the S&P 500 and fixed supply risk assets like Bitcoin. But as always, let me know what you expect. Thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.